When we look at this, I know a lot of people are talking about third quarter revenue missing what the street is expecting and second quarter sales not what the street was expecting. I wanted to jump, though, into the cloud services because everyone makes a big deal about their growth with AWS. And what do you see here? I mean, net sales jumped by about $4 billion. But so did the expenses for that and the income from it. The pace of growth doesn't seem to be quite as strong as one would expect. What are we missing here?
Well, AWS as a whole, I think we really have to look at law of large numbers. You're talking about a business now that's tracking well over $14 billion a quarter. We saw Azure's number come out yesterday at over 50%, and Microsoft, of course, is on a great trajectory, but they're not necessarily reporting the exact number of Azure. With AWS, they are the leading infrastructure as a service provider. They're still growing in the billions annually. And I actually find that percentage to be very encouraging. I believe the last 4 quarters were all at right around 30. So seeing it at 37 shows there's still momentum, that the secular and transition of back to mobility that's starting as COVID started opening up, although this quarter's had some ups and downs there. We're still seeing that demand for cloud and cloud services. So I would say overall, the AWS number was very encouraging. And the one thing that you asked about those expenses, in order to scale that business, there is capital expenditures on the infrastructure side, deploying new data centers, compute servers, resources, managed services, and of course, humans that have to help power that. So you're going to have to make those big capital investments. I would not worry about that. In fact, I think that was one of the strongest parts of this earnings report.
Daniel, we did, though, see the guidance missed expectations along with revenue, and that's obviously having an impact here on the stock. Some investors are concerned. From your perspective, I guess, how worried are you about the fact that Amazon won't meet expectations here going forward?
I think the big challenge has been the trajectory. We saw growth pulled forward. If there was one thing that COVID did that helped companies that were digitally transformed and ready to deal with the full digital experience, it was we saw them grow faster. While I think everybody was a little disappointed after several quarters of outsizing revenue significantly that it didn't come in, it came in pretty much just short on the revenue side and still managed on the EPS side. While you saw things like employee numbers up over 50%, you saw international sales growing, profit margins were up. So the overall data to me indicates that what we're starting to see is as mobility does come back, as I mentioned around AWS, as people are going out and shopping more, you've got things like Amazon's investment in brick and mortar, but that's pretty nascent right now. And people are moving more. And so I think we saw maybe 2 and 3 years of growth pulled forward. So there's still growth. And for every 1% that Amazon's growing, you're still talking about over $1 billion in revenue. So I think we got very comfortable and used to seeing these just extraordinary explosive growth rates. And we didn't necessarily fully consider behavioral changes that would come as our mobility increased, as we start to come out of this pandemic, despite the Delta variant and its hopefully short-term impacts.
Some companies blame the pandemic for poor earnings results. Do you think that Amazon, as they speak with analysts, will say, look, we're coming out of the pandemic and blame the pandemic for what you're saying is still growth and still growth with billions attached to it?
Yeah, that's a great point. I just think there's a normalization that's going on, and we need to start looking at what growth is going to look like as we start and continue to return to normalcy. I mean, this has been one of the most unexpected 18 months, and companies that were digital, born on cloud, and of course, how Amazon was born for this type of moment of being able to do everything digitally, their growth was just accelerated so much. And I think Amazon's going to continue to grow, but I think the street is clearly disappointed in that reset. I think we saw some really big outsized earnings from companies like Qualcomm and AMD and Microsoft. And I think there was some speculation that might happen to Amazon, but Amazon's business is so big, so diverse. And of course, as you saw, the cloud business did outsize growth from the past several quarters. So on the cloud side, that tech boom seems to still be there, but e-commerce is different. Behaviors are changing. And I think growth will continue, but it might become a little slower. And I think the street's going to have to decide if it wants to adjust to that.
Daniel Newman, thank you very much for joining us. Daniel is a research principal analyst at Futurum.